You're tuned back in to Agriculture Today, and we continue our show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue our domestic and international conversation on the grain market, wanting to pick up this second segment talking about corn.
Yeah, I'll start off and talk about the domestic aspect of things. So again, heavily watched for number in terms of U.S. corn yields, and almost again with the same issue that happened in the September report. Yeah, we had pretty strong yields, but it was what happened in the old crop usage side on the supply demand balance sheet that was a surprise to the market. So we ended up with a little higher. This is for the 23-24 market year that just ended August 31st, about 15 million bushels higher ethanol usage, 40 million bushels higher exports for corn, which is a strong finish. Total use up 55 million. Ending stocks, which had been, well, ending stocks down 55, down to 1.812 billion. So old crop ending stocks then transferred over to new crop beginning stocks and affected that balance sheet. And to a degree, again, 55 million lower beginning stocks did offset the 35 million higher production number. So ended up that, again, the big issue that was watched this month, and I think will be watched in the October 11th and November crop reports and WASDE reports will be that corn production number, and all that much more. We get to October 1, will be all that much more into the fields and be able to be stronger on that. So ended up and really with there were no other changes on usage estimates for the new crop 24-25 marketing year, which began September 1. So we ended up with basically with the difference between the beginning stocks and the production numbers ended up with a little bit lower, just about 2.057 billion bushels ending stocks for the projected for that new crop marketing year. Stocks to use up to 13.7% from this year's 12.1, and prices about a dime lower at 410. So interesting to watch that. I would also just mention quickly on grain sorghum, not a lot of changes in the grain sorghum balance sheet other than again about 23 million bushels higher production and more optimism, Guy, really in grain sorghum exports. Now there have been announcements between China and the U.S. on sorghum related export goals, et cetera, and China's other actions with other countries, Canada in particular, on various crops. So in this case, expectations are that U.S. grain sorghum exports will increase, and that being the main thing that changed in those balance sheets. Price also projected to be 410. So I'd throw it over to you with regard to the international side on corn and feed grains.
Yeah, interesting. Just to comment on sorghum and barley there. There's, I guess, the underlying rumor in the industry is China looking at putting import tariffs on both those commodities, sorghum and barley, which would be similar to wheat and corn, which would be 65% when it's above the tariff rated quota number, the TRQ number. But we'd like to think that wouldn't happen, but that would have a significant impact on that whole pricing structure and competitiveness. Looking at the coarse grains and corn situation, more particularly USDA this month, main changes they made were in non-U.S. corn production. They lowered it 2.2 million metric tons to 832.8. That's 1.8 less than last year, so a little less production on corn globally. Just going back to China a bit, import estimates for corn increased by 500,000 metric tons to 23.5. However, that's for this year we're just finishing up with some good demand in China. However, looking forward to this coming marketing year, imports are expected to be 2 million tons less, around 21 million metric tons. But China sort of is talking like they don't need it. Sometimes they often do that before they step in and start buying. And we're in that time of the year now where we're starting to switch from that South American production to to the U.S. Just going back to the Black Sea, which we mentioned on wheat, USDA did lower the Russian corn production slightly, 600,000 tons to 13.5. That's 3.1 million metric tons less than last year. And they correspondingly lowered their exports 400,000 tons to 3.8. Ukraine production mainly steady at 27.2. That's down 5.3 million metric tons from last year, and they're looking at 24 million metric tons of corn exports there. So that'll leave us at the end of the year with the world ending stocks for corn down 1.8 to 308.4 million metric tons. That's down 1.3 million from last year. So not a big change there on corn, but a few dynamics in the international situation.
What are we seeing for things for soybeans, Dan?
Yeah, I'd say one last thing. So both the world stocks to use and the world minus China stocks to use for corn are tightening up a little bit. I would say that, again, by the time this information gets out, it's fine. But we, Guy and I were both looking at information earlier this week with regard to planting problems, dry conditions in South America. So I don't doubt we'll look at this information, and that the bigger info probably in the next 30, 60 days may be what's happening down there for planting progress. So we'll see where that goes on these major crops. I would say then for soybeans, on the U.S. soybean balance sheet, that minimal changes for old crop, just a little bit higher domestic usage, just a little bit of a tightening of ending stocks by 5 million bushels down to 340 million. For new crop, again, large crop projected. Really the big issue for soybeans right now is that the projection of U.S. soybean production for 2024 at 4.586 billion bushels is up 421 million from the year that we just from the previous marketing year, the 23 crop. So that just drives all the rest of these numbers. A little bit of change in the ending stocks figure down that was projected from September down to 550 million, but that's 340 million 23-24 marketing year, 550 million this one in the current one, and over 200 million higher, and price was 12. Season average price was 12.50 last year, 10.80 this year. I just would say when you gaze over at soybean oil and look where it's going, an increasing slice of soybean oil continues to go towards biofuels, and would say that's no small issue, and by the time we get what's happening in soybean complex on one hand, and also on the in the ethanol complex on the other, we have some exports happening on that. So it's not just entirely a domestic issue when we start looking at biofuels, particularly for corn, and to some degree probably on the soybean side. Turn the international side over to you, Guy, on the soybeans.
Not a lot to say on the oil seeds internationally. China imports were left unchanged. They take over 60% of the world trade in oil seeds, coming in at 109 million metric tons compared to last year at 111. Their crush is up at 103 compared to 99 last year. One thing I've been happy to see is China started coming into the market, and U.S. soybeans are now competitive with Brazil. We're starting to see some buying activity there for this coming season as those logistics start to switch. Looking at South American production, it was basically left unchanged at 169 million metric tons. But look, that's 16 million metric tons above last year. Brazil was at 51, down a little bit because of the dry weather, and Argentina was up a bit. Exports, we're looking at unchanged for Argentina, 4.5 million metric tons, Brazil at 105 million metric tons, and an increase in Paraguay at 7.3 million metric tons. So that's sort of where we're sitting in that South America or that global oilseed complex.
And if I could add one thing on that, dry planting weather causes delays for soybeans to be put in the ground. Doesn't mean they won't put them in eventually when they get moisture. But when they do, then they still have that season. And then once soybeans come out, then if the crop's delayed, then it pushes that second corn crop later out into the summer months where it's more vulnerable to heat. So we're watching what's happening in South America for sure.
And Dan, wanting to make a quick mention of what we're seeing for wheat.
Well, as we
Oh,
talked,
sorry, for cotton.
oh yeah, for cotton, would say that the imbalance, the big issue on cotton is that prices are lower here domestically, projected in the 2023 marketing year, $76 per unit, and down 10 full dollars per unit to 66 now, and so you have these issues. You have challenges happening in the U.S. market, and it's cotton's still a profitable crop in Kansas and the southern part of the state, but lower prices, no doubt, are a challenge for it.
And Guy, just for a little bit of fun when it comes to the market, what do we see for coffee?
Well, we've seen coffee in the last few months reach back up to close to historical highs as it's approaching $260. If we look back a year ago, it was down around 145. So here at IGP, I've been stocking up on my coffee inventories, and I've been telling all my friends here around the university, if you're a coffee drinker, go long coffee here a bit. It takes a while for those prices to precipitate back to the retail level, but look, it's happening already. So yeah, if you're a coffee drinker, you want to secure that supply before we see these prices go up significantly.
Dan,
And that's on the back of dry weather in Brazil and South and Latin America. So it's not only soybeans we worry about, but coffee as well.
Guy, Dan, I appreciate you both taking the time to join us today.
Thank you very much, Shelby. We appreciate it.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.